Silicon Valley Bank (SVB) failed on March 10, once again inciting panic and uncertainty in the US financial system. Yet, since then, the price of Bitcoin (BTC) has been on a run. What is going on? Well, stick around to find out. Welcome to Knowledge Pilot. In the early hours of Friday, March 10, Bitcoin was trading around $19,600. It crept to just around the $20,000 price until the middle of the trading day. Then, everything changed. At around 12 p.m. ET that same day, it was announced that SVB was going to the FDIC receivership. At that point, Bitcoin wobbled a little, shedding $200 to dip below $20,000, jumped around and spent most of the weekend trading above $20,000. By Monday, March 13 at 9:30 a.m. ET, it was trading at $22,386. And then the fun began. Just 24 hours later, Bitcoin was trading at $26,175. At one point, even touching up against $26,500. A week later, it was sitting at over $27,000. It is important to understand that the backstory matters a lot when it comes to the price of assets. This is what the Federal Reserve Chair Jerome Powell said about that. People's expectations of inflation have a real effect on inflation. So, what story could possibly lead to this type of aggressive 35% throw to peak change? It's simple. A lot happened. Bank failures. Given Bitcoin's history, the bank failure correlation is obvious here. At least 3 US banks have failed: Silvergate Bank, Silicon Valley Bank, and Signature Bank. Others, both American and non-American, are failing. The reason for these failures is not because of competition from Bitcoin, so that's good for Bitcoin's price. Right now, it isn't clear who is at fault for the 3 bank failures, because we don't really know if these banks are failing due to insolvency. We do know that SVB failed due to a classic bank run that was fueled by an apparent weakness showing on its balance sheet, because of poor long-term risk management. We also know that Silvergate was running into some issues and had to take a federal home loan bank loan, but its eventual winding down was reported to be voluntary. Next up, we have Signature Bank, where at the moment even the regulators can't figure out why the bank was shut down. Things are pointing to a crisis of confidence in leadership. Let's add on to the fact that there are wider risks to the broader global banking system. The Swiss bank Credit Suisse just received a 50 billion Swiss franc loan from the Swiss central bank. This is saying that the central bank wants to save Credit Suisse. Back here in the US, 11 banks just injected $30 billion into California-based regional bank, First Republic Bank, in order to save it. This is sending the strong message that banks want to save a competitor for fear of contagion. Otherwise, why wouldn't they just let a competitor fail? That all said, we know one thing that isn't causing these banks to fail. These banks aren't in trouble because of bets on Bitcoin, crypto, or the companies in those industries. What appears to be happening is the fractional reserve banking system, which most of the world's economies use, is under stress due to the rising interest rates, and it's showing cracks. Let's just quickly explain what fractional reserve banking is. It is a system in which only a fraction of bank deposits are required to be available for withdrawal. In other words, banks only need to keep a small fraction of your cash handy and can create loans from the rest of your money. So, the current sentiment strong enough to drive the price of Bitcoin is this: as the banks continue to fail, you should move your money into Bitcoin. FED just gave everyone $300 billion more reasons to buy Bitcoin. A report shared by the central bank announced a $300 billion in loans from the Federal Reserve emergency funds to US cash-strapped banks. Approximately half of the total amount was allocated to holding companies for the 2 failed banks, namely Silicon Valley Bank and Signature Bank. This situation has resulted in widespread concern among financial markets. However, the Federal Reserve did not disclose the identities of the other banks that received the remaining half of the funds, nor did they indicate the number of recipients. These numbers offer an initial insight into the extent of the Federal Reserve's support for the financial industry following the collapse of the 2 banks over the past few weeks. The Federal Reserve has further extended its aid by providing an extra $11.9 billion through a newly established lending facility announced recently. Following the news, as expected, the cryptocurrency market puts on a bullish run. The price of major cryptocurrencies, which include Bitcoin, has surpassed the 28,000 price level. That is a huge jump from where it was trading in December 2022 at about $16,000. Not all crypto is like Bitcoin. Amid all the market turbulence, Bitcoin's price is going up faster than even the much smaller and often more volatile altcoins. We see that by looking at how Bitcoin dominates the crypto market. If we were to look at Bitcoin's market capitalization compared to the rest of the cryptocurrency market, we see that the market capitalization of Bitcoin has increased by $194 billion in 2023. This represents a 66% year-to-date growth, which vastly outperforms top Wall Street bank stocks, particularly as fears of a global banking crisis are rising. Bitcoin positively correlates with USD. In the ongoing banking crisis in the United States, the US dollar appears to correlate directly with Bitcoin. With all the fear of further turbulence in the United States financial markets, Bitcoin, the most valuable of the cryptocurrencies, appears to be moving in sync with the US dollar. But why is that? Historically, Bitcoin moves inversely against the US dollar. That means whenever the US dollar rallies, Bitcoin tends to drop. This has been observed throughout 2022. As the US dollar strengthened across the board in 2022, crypto prices, including Bitcoin, were hit hard. To illustrate, Bitcoin has crashed from as high as $69,000 in November 2021, dropping below $20,000 in November 2022. The crypto meltdown was made worse by many other factors. The collapse of USD, an algorithmic stablecoin by Terra, the crash of several centralized finance projects like Voyager Digital and BlockFi, and of course, the spectacular fall of FTX, the Sam Bankman-Fried exchange in November. The bankruptcy and failure of some of these platforms dented user confidence, forcing money being moved to safer havens beyond the crypto markets to gold and the US dollar. At some point in 2022, indexes that track the US dollar showed that the greenback strengthened by over 20%. Yet during that same time, Bitcoin more than halved, demonstrating the long-held inverse relationship between the US dollar and Bitcoin. Things are changing. As of mid-March 2023, the rallying Bitcoin and crypto prices now seem to coincide with the relative strengthening of the dollar and is shifting. When Bitcoin prices rose from $19,700 recently to $26,300, the US dollar added 3% from late February 2023. The US dollar holds firm despite questions being raised concerning the monetary policy approach adopted by the Federal Reserve. While critics constantly attack the FED, the US dollar remains steady, syncing up with Bitcoin, which creeps steadily higher. So, is it time to buy Bitcoin? Maybe it is, and maybe that's what is happening. Bitcoin, with its fixed issuance at the time of monetary expansion, looks like investors are thinking that it is a way to avoid this recent financial crisis. There's systematic global bank risks, FED lending $300 billion to failing banks, and amid all the general worry that the Federal Reserve may pull back on rate hikes. All that has added up to Bitcoin swinging up massively over recent weeks. We're going to wrap things up here for today. Remember, don't invest what you can't afford to lose, and always check with a professional before making any investment or financial decisions. We hope you liked this video. If you want more, check out our other videos on the screen. Thank you for watching.